I'm Charlie Leonard.
And I'm Sean Pascal.
And we're the Leonard Real Estate Group. With us today is our good friend Aldo Saavedra with Financial Group.
Good to be back, guys.
Welcome back.
Thank you. Welcome back. Aldo, question. What are the typical loans that are out there for buyers that are trying to buy a house?
I'm gonna tell you, nowadays there's a lot more options, but specifically your, major programs are FHA, VA, and conventional. You also have non-conforming loans and also hard money loans, but you're typical of those three that I mentioned.
So what about those buyers who have been through a foreclosure or have been through a bankruptcy? Do those loans apply to that person as well?
It all depends what the circumstances are, but somebody who's had a short sale, can actually get a loan through FHA after 2 years after the short sale. And for a conventional loan is 4 years. If they have actually gone through a foreclosure, they have a waiting period of 7 years unless they're going into a non-traditional loan. I would tell you FHA, one of the positives that they have is the rates are really low. But the biggest negative is that they have mortgage insurance premium, and that mortgage insurance premium as of 2013 is for life. You can never get rid of the mortgage insurance premium. Another negative is that you have to pay up for mortgage insurance, which is 1 3/4%. That is the aspect of FHA. Another positive of FHA, it's easier to qualify. They're more flexible in terms of your income ratios and also your credit history. For conventional, the negatives is that it's harder to qualify. But if you're putting less than 20% down, your mortgage insurance premium that you're going to have, you'll eventually be able to get rid of it once you pay down your debt to 80% of the original purchase price. For VA, the biggest benefit for VA, in my opinion, if you're a veteran, this the way to go, is that you can buy a property and finance 100%, and the rates are the best. There's no rate that's better than a VA loan. On top of that is you will have to pay upfront mortgage insurance, but there is no monthly mortgage insurance you have to pay for VA. So anytime that you have the option, VA is the way to go.
Aldo, what about from the seller's perspective?
For the seller's perspective, not so much. The VA, has guidelines that want to make sure that the property is in livable condition, and they're going to want to make sure that the house is up to par. They may require the seller to have, fix certain things around the house. I think if you're selling the property to a veteran, you have to be ready either to make sure that the house is in good condition according to VA standards, or that you're in a position that you're able to do the different touch-ups that are going to be necessary to close that deal.
Aldo, that was great information on the different loan options for buyers and sellers. We really appreciate it for coming again and joining us.
It's my pleasure.
I'm Charlie Leonard.
And I'm Sean Pascal.
We're the Leonard Real Estate Group. We're here for all your real estate needs.
Thank you.
Thank you.
Amazing.